president's economic team goes to China.
After a whole night thinking, I say I still want to do it.
Hey there, this is Rui Ma, your China Tech Analyst. Welcome to TechBuzz China Livecasts by Pandaily. As the name suggests, these conversations are recorded live and then edited for your listening pleasure. Some of these chats are open to the public, and we welcome you to join us. So be sure to follow us on Twitter or sign up for our mailing list to get notified. Remember, members of TechBuzz China Insider get priority access. So if you're an investor or operator looking to join the smartest community online focused on China tech, go to techbuzzchina.com and see if you qualify. Extra thanks to our partner pandaily.com, where you can learn everything about China's innovation. Thanks for subscribing, guys, and do give us a review. Thanks, Ray, so much for being here today, and also to the TechBuzz Insiders who are joining us live on Zoom. Well, let's get started. Ray, please introduce yourself to the audience.
Sure. Thanks for having me here. So I'm Ray Hu. I'm the founding partner of Blue Lake Capital. So we founded this firm almost 7 years ago. And the premise of the firm is to do venture investing a little bit differently. We do adopt a research-oriented approach so that we do thesis-driven investment. And in the last couple of years, the thesis is mostly built around software. I think we are also building a very concentrated portfolio. So at Blue Lake, we only have about 10 to 15 companies in each of our funds, even if we are early stage nature, and we try to concentrate kind of majority of our each fund to 3, maybe 4 portfolio companies, so we can maximize the return potential of the fund as well as maximize our time invested in portfolio management. Right now, we manage 5 funds, so 3 US dollar fund and 3 RMB fund.
I believe the cumulative AUM is around 700 million. Is that right?
Yes. It'll be $120 more by end of the month.
Got it. Very cool. I still remember when you first got started and we were chatting and you told me that you were going to quit GGV and leave to do your own fund. And here we are, not that many years later, and you're almost at $1 billion AUM. So congratulations. Really impressive. I want to just go back to what you just said, which is that you've been focusing on software for the past couple years. I remember that when you were starting the fund, it was all pretty much consumer internet investing in China, right? You had worked on a few landmark deals in that industry, but you actually decided that based on your research you did, that actually SaaS enterprise software was the right thing to bet on, especially with this concentrated portfolio approach. Could you elaborate on that a bit more for the rest of us?
Sure. To be honest, when I initially got started back in 2014, I know how to build a portfolio differently. I know how to run a thesis-driven approach, but I really hadn't back then decided to focus majority of our efforts on software yet. It's a trial and error process for us. US dollar fund 1, even though it's a very well-performing fund, I think it's gonna eventually generate 10x for our investors. But we spread around. We have some social network, B2B marketplace, software, and e-commerce. It's an opportunity to experiment what we are really good at. And when we want to run our strategy to build a thesis-driven kind of investments, what is the most powerful model that we can leverage research to maximize? Initially, we actually didn't very explicitly focus on software. It was the beginning of 2016 when I reviewed, we have done really well when we look at the market for the next 3-5 years, where we really do see good opportunities coming. So software obviously came on top of that. I think one really convincing and leading indicator or proxy we looked at is a maturity or the growth of the public cloud infrastructure, because at GGV, back like 10, 12 years ago, we looked at SaaS products in China as well. Before public cloud was available, like those SaaS companies unfortunately have to manage their own data center, the security, the storage, and everything. It's so complicated and expensive to build. But with the maturity of the public cloud, things become much easier. So back then in 2016, what we saw is Ali Cloud's growth is on fire. It's still growing like more than 80% year on year right now. The question we had for ourselves back then is, what are the applications running? So we spent some time trying to dig into the numbers, talk with people, and eventually figured that the trend is coming. I think this is a really, really important kind of boost to the entire SaaS industry, that with the infrastructure ready, all of a sudden, for example, like SMBs can afford to use software. It's easy to access what we saw back then, and eventually make us make the decision to focus primarily on software.
Got it. So you saw the infrastructure being built out, the cost going down, and decided that makes a lot of sense to invest primarily in enterprise software. And SaaS is obviously a big part of that. So I've actually already given to the group here a bunch of profiles on your most notable investments, including, for example, Jushuitan. So they know all about it. But help us understand what you're looking for when you make these investments. And also, if you can, put in there also what you're seeing today.
Sure. So the way we see the market opportunity is also in a way like the investment team where our internal capability is. So we right now in the firm, we have 4 managing partners. 2 of them have come from an operation background. They have run companies, they have run software companies, they have run business service companies in the past on 2 different sectors. So one primarily focused enterprise customers, large corporations, and other guy focused primarily on SMB. So naturally, that's how we decided to divide our efforts to SMB and enterprise. It turns out to be quite effective because the software demand, the type of product they need, and on the company side, the type of go-to-market approach are all very different in these 2 segments. So that is how right now we split our responsibility and categorize the market. So in each of these 2 categories, for example, SMB, we primarily invest in vertical software, because in China, there are like so many tens of millions of SMBs, and to build a universal horizontal product to cover the entire universe is very challenging to do. And in a way, you can also risk putting yourself on a radar screen that the big incumbents can go into. So that is why we are a big fan of vertical software, especially in industries where there are like millions of SMBs with a like large potential market, and preferably on top of that in a data-rich environment. So I can explain the data-rich environment later, but as you can imagine, like for example, industries like e-commerce, online gaming, and a certain part of restaurant industry, retail industry. So thanks to the education from Dianping, Meituan, Alibaba, so many kind of merchants in those verticals are start to adopt digital solutions to manage part of their business. So we are a big fan of that kind of a vertical focus in data-rich industries. That is on the SMB side. So on the enterprise side, because the limited number of customers, we will eventually have try to go with horizontal solution, primarily the supporting functions, where we think is much easier to build a standardized product and kind of push that out towards the entire market. Supporting function, what I mean is basically in a large corporation, anything in the back office, HR, finance, customer service, legal. So that is where we are focusing majority of our effort in the enterprise software world, to identify opportunity, to study comparable companies in other parts of the world and understand local demand, find entrepreneurs that we really like. That is where we build our portfolio. We have around close to 30 companies in SaaS right now. And I would say right now about close to 10 of them are already over 100 million RMB in ARR.
Well, that's pretty impressive because SaaS is actually notoriously difficult to monetize in China. Anyway, I think it's really interesting you said that part of the thesis for SMBs is to focus on verticals. And while I'd love to have you talk about one of your portfolio companies next, I'd also like to dig in on the point you made about the larger enterprises. You said that you're actually focusing on back office, right? That's surprising to me because I thought a lot of the larger enterprises are really tricky to deal with and they don't really want to pay for a standardized solution. They want something more custom made and are much more likely to push you towards a sort of consulting esque model. Is that still true or is that quickly changing?
The short answer is that to serve a corporate customer, initially when you land your product, you certainly need a fair amount of implementation. But that doesn't necessarily mean that you have to customize your product to fit the demand. Usually what we see is that the implementation is more for like API connection, training, and things like that, because the existing IT infrastructure in most enterprise customers are quite complicated. And if you are a system that is well embedded into their daily business operation, business process, you inevitably connect to their kind of existing HR system, finance system. So that part, I think, can hardly be skipped or undervalued. But we do see opportunities to build a standardized product to serve even enterprise customer. If your product is robust enough, you can quickly that feature to configure your product for different kind of a user case, which is definitely doable. But it is also true, like back to your question, the willingness to pay in China. I would say for most of our SaaS portfolios on the enterprise side, when they approach a customer, it is rare that the target customer didn't have any subscription-based cloud-hosted software that is already in work. So the market has been pretty well educated. Also stuff like, what about my data security, things like that, they're already gone. People are increasingly aware that RD Cloud could be much more secure than their own IDC. So the question right now is willingness to pay. So I'll give you one example. Like we have an expense management software company called Cloud Helios that develops a very similar solution to Concur in US that does expense management. So they are selling in Japan and they're selling in China as well. So it's specifically like we have side-by-side comparison of customers in the same industry with similar size. In China, we can charge customers for 200 RMB per account per year. In Japan, which we believe the pricing point is close to US, is $200. So that's relatively the pricing difference of doing a SaaS kind of business in China versus in developed world. But it is what it is. I think the benefit of that is hopefully I think in China, the engineering cost is still slightly lower. And if you think down the horizon far enough, that company, if they can survive here in this kind of really competitive environment.
Oh, whoops, I think we lost Ray on the audio there, but he's basically trying to say that these companies can survive in the ultra competitive environment of China, then they'll probably actually do really well abroad where it's much more profitable. I want to also double click on a point he made, which is about the enterprises being open to public cloud now as well. And I think I just shared with the group earlier, but the iResearch report on cloud for China for 2020, to my surprise, actually showed that the third largest industry that was paying for public cloud is the government. So yeah, even in China, the government is now open to using public cloud. And that's really good news because that means probably a ton of other traditional conservative enterprises will onboard as well. Anyway, now Ray's back, and I want to have him talk about one of his portfolio companies, one of the fastest growing, because I think we can talk about the industry all we want, but nothing really crystallizes knowledge like talking about a specific case study. And I think that case study we should highlight is probably your company, Jushuitan, which is a vertical SaaS company. And now that I hear your investment thesis about really favoring data-rich environments, I think this makes a lot of sense. So can you tell us a little bit more about that company and also how you got around to investing in it? What excites you about this whole industry?
Sure. So we like JST, like kind of our initial short names for Jushuitan, easy to spell for non-English speakers. What they do is they develop a product that allow millions of e-commerce merchants who are selling on Taobao, on JD, PDD, and sometimes on Amazon platform to manage the backend, specifically order processing and warehouse management. To think about when a merchant received an order from regardless which kind of e-commerce platform to the point where the package is shipped out of the warehouse, that entire backend process is managed by their software. So we see this as a demand that is universal to almost all e-commerce merchants, especially when they have more than 200, which is a very low threshold, more than 200 packages per day to process. They need a software so that they don't make mistakes on order processing, on the warehouse, on sorting. So that is where kind of the product kicks in. They are not the first one in the market. When we made the investment, they were not even the largest. But I think the company really, or we think they held off to the temptation that they build a standardized product and they kick out customers who do not use their standardized version, who want to have like incremental or weird customization requirement. They kicked all of them out. At the same time, I think they are expanding their product portfolio to make it more and more powerful to accommodate more and more user case, but they insist on selling like one version of product all the time. That is really laying the foundation for the business. And this is one thing we really like. And the second thing we really like about a business, which is back then, I think quite bold and innovative to do. And increasingly, we are seeing that in China has been almost a industry like default for all SaaS product targeting SMB is to build a ground sales force, which back then people think that is crazy, which is way more expensive for that low average contract value. But we think if your customers are like concentrated, you can run like pilot programs to test what's the ROI of the sales force. It's probably worth doing. And especially in SMB, I think that vertical have that reputation for low retention rate. So build a like more touch point with your customer base so that you can have potentially higher retention.
Yeah, that's super interesting, right? Because I looked on the website and I read some of the CEO's interviews, and it's pretty clear that out of their 2,500 employees, 1,700 of them are not engineers. I don't know if they're salespeople, but they're definitely not engineers.
Yeah, so about half of them are sales or business development. The rest half are implementation / customer service.
Yeah, and I saw that in a couple of the case studies that I highlighted. This was really helpful because a lot of the SMBs, I mean, it might be the first time they're using software to manage their orders, so they actually need a lot of hands-on help. I also saw that JST was benefiting a lot from the live streaming e-commerce boom, and that the live streamers basically are increasing the e-commerce GMV, and they also need an order management system. So these are really good points that you mentioned. I wonder if you can go a little bit more specifically onto the opportunity of cross-border, because what I saw was that JST went into cross-border, but then you also invested in another company along with JST that's doing cross-border. So what's going on there? What's the opportunity? And, I actually think cross-border e-commerce might be a little surprising to people as a niche who don't look at the space and who don't realize quite how big it is.
Yeah, in short, I think that is the one mega trend we are betting, and we have very high conviction, is that the way made in China products are distributed around the globe will change dramatically down the road. So in the past, if you think how those like trillions dollar of China products are sold in US, in Europe, either sold through like Target or Walmart, those large retail chains, or layers of wholesalers, distributors before they reach end consumers around the globe. But going forward, we believe with adoption of e-commerce, with platforms like Amazon, eBay, Shopee, Lazada, which those Chinese products, they can directly reach consumers or end users in other parts of the world through those e-commerce platforms. So we see that trend inevitably, it will come. So we see that in China already for the domestic part of retail, and on an international scale, we think that should happen as well. So given kind of the scale of the potential, we decided to take a look at a space like what's the technology, what's the like software infrastructure that can help this kind of a major shift in international trade. So Lingxin was a company, I think it was initially first invested by JST. So they knew the space really well. They are interested in pursuing that opportunity, but don't really have enough engineering resources or talent internally to do that. So they found this gifted entrepreneur who used to be a product manager at Tencent, give him the right amount of resources and the know how to build e-commerce software and put ideas into work. And obviously it's been really successful. So we jumped onto the opportunity in the Series A round and invest again together with JST.
Oh, that's super interesting. I didn't realize it was incubated by JST because they had put in their press releases that their cross-border e-commerce business was actually booming. But I guess it makes sense that they want to keep most of their resources towards the super competitive domestic market. Okay, that makes sense. Now let's dive a little bit away from SaaS though and go into robotics. Just one question really on robotics. I did a lot of research on your SaaS companies. I'm less familiar with your robotics companies. So could you talk a little bit more about them, about what you've been investing in? I saw that it seems like you've been investing in everything from robot software to a mopping robot. So yeah, tell us more.
Yeah, for us, I think they're not necessarily like subscription-based SaaS company, but they are software company as well. So as long as you can sell the product with 60, 70% gross margin, we think that is a software business. At the core of that, at least. So we are seeing this like machine learning, AI adoption in almost every vertical in some of our SaaS products as well. And we think they can be applied in the physical world in a powerful way as well. So that is why we looked at autonomous driving 4 or 5 years ago.
Oh, I definitely remember this. Actually, the company you invested in, I met in Vegas a few years ago. It's called Momenta, right?
That's right. So that is where really give us an opportunity. It's an eye-opening experience for us as well. What kind of AI and machine technology can really do, can be applied to change our daily life. So we think this is really a cool and innovative element that can be applied in many applications around us. So if they can find a powerful user, we really would like to fund such opportunities so that they can use machine learning AI to change our life experience. So in short, I think that really is what inspired us to take a hard look at automation and see that be applied to some of our software product like customer service, payment processing, contract management, and we're also seeing them in some consumer user case like autonomous driving, mopping machines.
Okay, we have questions from the audience, and I think I will just group these two questions together because I think they're two sides of the same coin. Going back to SaaS, you had said earlier that one of your portfolio companies, the one doing expense management, was actually actively selling in Japan as well as China. Are you seeing this in a lot of your other portfolio companies? Are they internationalizing? And if so, are they doing it in other mostly East Asian countries or maybe Southeast Asia? Or are they actually also trying to come to the West? So that's question number one. And the second part of it is really just the reverse. Do you think foreign SaaS players have a chance in China, or should they probably not come? Because number one, they're not going to be able to sell their products for very much money, and two, they'll need to hire a very large on-the-ground sales force. So your thoughts on these questions, please.
International expansion. So for Chinese companies to expand out of China, I think that trend is still very early. The broader domestic SaaS market is also in the early days of development. But with that all being said, we do see a couple of companies, some in our own portfolio, some kind of in the broader SaaS community, are starting to attract customers from other countries. Cloud Helios, the expense management, we bet. We have another business intelligence software product for gaming companies specifically that really allow game studios to optimize the user time spent on user pay on the product based on the analytics. They are attracting customers in Japan, in Europe as well, because some of the Chinese games, they're so good at monetizing the game. And that ability is built into the software, which kind of a lot of foreign gaming companies are trying to leverage as well. And even at infrastructure level, like PingCap, which is a very high profile, like open source database company in China. They are also generating actually right now majority of their revenue outside of China, like in Southeast Asia and in US as well. And Kujiale, like is a portfolio in my previous firm, GGV, which is a like home designer focused solution. They're also doing very well outside of China. So we do see that trend is coming. And at the core of that is basically the Chinese engineers' ability to iterate the product fast. I think that is basically at the core of every competitive SaaS product offering. Back to the second question, do I think a US or international SaaS product can be successful in China? Yes, only if they are willing to invest in kind of a local R&D and product development. We really need to listen to the local customers and adapt to that quickly. So if all the like local demand need to pick up by the Beijing sales office, send it back to Silicon Valley, wait for another 3 to 6 months for development, then that's hopeless.
I'd love to double click a little bit on that because I'm getting a little bit of conflicting information. It sounds like for one of the examples you gave earlier about expense management, that company is actually growing because they have this product that just happens to fit well with the needs of a Japanese customer, or the gaming company, fits well with the needs of a European gaming company. So is it actually that these Chinese companies are gaining market share outside of China because they are localizing for foreign customers, or is it just that the needs that they accommodated for their Chinese customers happen to match those abroad? What do you think?
In the gaming solution that I talk about, I think the demand for the customers domestic and abroad are fairly similar. In the expense management product, like which we're selling in Japan, as you can imagine, like the tax code and a lot of the regulations are very, very different in the Japan market. Even the go-to-market approach is very different. So we do need to set up specific resources to localize our product and to make that kind of fit the Japanese market better. It really varies product by product, but you do need to have that mentality to invest in resources and react quickly to whatever feedback your customer gives you.
You're saying that's an advantage of the Chinese companies, at least in your portfolio, that you can observe.
Across the board, yes. You think about so far what type of Chinese like software are successful abroad. TikTok is one of them, and maybe hundreds of Chinese games is another set. I think both of them are basically very good at iterating their product and adapt to local demand. And the core of that is actually the engineering resource and their mentality.
Cool. All right. We have questions from the audience.
Hey, Ray, thanks a lot for taking the time. My question is, so in the US, within the cloud market, at times you'll see competition from some of the infrastructure cloud providers who will end up moving up market or develop their own sort of SaaS product themselves, which can sometimes have a tense relationship with some of the SaaS companies based in the US. I'm curious whether you see anything similar in China or how you even think about that longer term in terms of benefiting from the infrastructure that's being sold, but also potentially seeing them as a competitor.
Very good question. I think we are increasingly seeing big public cloud players to step into, in the last 1 to 2 years, developer tools like low-code tools, security tools. And in the last 12 months, I think certain applications where they see a lot of potential they're trying to build some of their own proprietary applications for their customers, including some of the verticals I mentioned, like expense management, hiring management, contract management. So when they have like millions of customers, if they see this is a common demand, a lot of their customers are asking for, yes, that is one kind of trend. We are increasingly seeing. Did that worry us? Yes. Does that mean our portfolios are out of business? I don't think so. So as long as they can really build a solid product with high customer satisfaction rate, I think we should be able to do fine.
David, you have a question.
I had a question about customers. You mentioned earlier about how you're going after the SMBs. What are the customer pain points today that these customers you're trying to solve for? What are the biggest problems that these customers or biggest pain points they face today that aren't being addressed?
Yeah, so In general, I think that is also not something we analyzed top down and then applied to our investment thesis. It's actually the other way around. When we observed what type of our software, like which part of our software portfolios are doing better than the other and why is that? So one common pattern we have identified is that for SMB software, usually if you are addressing their sales and marketing demand, or if you are positioned as a solution to help them increase sales, it's much easier selling process. It's much more welcomed by the market. On the other way around, if you are targeting corporate customers, boosting sales is a very hard value proposition to deliver. It's usually help them to increase efficiency or lower costs. For the SMB segments or vertical, most of the products that we backed are doing well, usually targeting at somewhere along the value proposition of helping them to increase their sales. Even in GST's case, order processing and warehouse management, that's basically help them to increase the bandwidth of their backend. We also have a kind of a customer service bot called the Leyan that uses NLP to address usually pre-sales inbound queries that really allow like millions of merchants to answer questions, basically pick up inbound leads in peak hours where their service center is out of capacity, or during off hours after 11 p.m. or before 8 o'clock in the morning. So if you can clearly position that and it delivers value, it's usually an easy sell.
Okay, so we have another question about what is the appropriate background of the entrepreneurs that are likely to be successful doing SaaS in China today. So, for example, in our WeChat prep call, we had talked about Kujiale. They're one of the bigger SaaS companies in China. The space is home decor. And if you look at the founders' backgrounds, while they're from China originally, but they studied in the US and actually all worked for big tech here. And they just have this very highly technical solution that they created for the market. So do you think that is the type of entrepreneur background that's more likely to succeed in China today? Or is SaaS in China still more like consumer internet and the go-to market strategy is what matters more, and being able to manage, the on-the-ground sales?
We have enough data sample in our own portfolio. I would say the education or work background of the entrepreneur is an important element, but I don't think it's the most decisive one. For us, I think the most important one is that their patience and customer focus. So if they can really build this culture and mentality for themselves and for the entire organization to really focus on customer and the products, I think the business can eventually prevail. Because in the SaaS business, the beauty of the business is retention and recurring revenue. And what's driving that is basically kind of customer satisfaction. So if they can really make that kind of the Northern Star of the organization and build every effort around that, how to gradually and over the time increase customer satisfaction rate, I think the business can be successful regardless of their background, from like in Ivy school or from like a local engineering school, or with background from Alibaba, Tencent, or have worked at nowhere.
One of the things that I've struggled a little bit with, at least with SMB in China, has been quite high churn rate or low retention, just by nature of the fact that the SMBs don't stick around as long. Have you seen something different, or what do you look to or think about when you're thinking about those retention rates for the SMB focused companies?
Yeah, I'm glad you asked. I would say there are actually two retention. One is logo retention, one is dollar retention. So logo retention in the SMB market, that is tough. In general, SMBs, they have a certain death ratio, usually like 20-30% every year. That is the nature of the business. There's no way a software company can change it. Pick your customers really carefully. You can maybe increase that, or like increase your logo retention rate by 5, maybe 10%. That's it. Then how to increase your dollar retention ratio through that process is, for us, I think it's a more important question to understand. Our experience so far has been how you price your product. So if your product is priced in a very old-fashioned way, like per seat or per account per year, then your dollar retention will pretty much be similar to your logo retention. But if you can use a kind of a usage-based pricing and can grow with the more successful like subset of your customer base, I think the dollar retention can compensate for the lost logos, can even allow you to have more than 100% dollar retention ratio down, which is a very good result. So in JSTs, for example, their pricing model is they charge their customers around like 10 cents RMB for per order process. It's a very typical usage-based pricing model that allow them to grow with the more successful customer. And when you that hard, it also makes your sales and customer adoption so much easier. When the customers are still small, saying if they're only shipping 200 packages a day, take my software for free. You only pay 10 cents per package, which means like 20 RMB per day for the software, which is nothing. People are willing to pay. People are willing to use the product. But when they get to 20,000 packages per day, they cannot leave you. For them, it's like a tax they have to pay every day. And they're happy to pay it. So that is something like we are encouraging many of our SMB SaaS companies to consider. So if they can see a way not to really overcharge their customers, but also design the pricing scheme to usage-based, what we think can be really powerful down the road.
I did see that when I was researching GAST. I'm curious if you can tell us what are some of the reasons why other companies cannot, all adopt this kind of usage-based pricing. Is it that there are some use cases that makes it really hard, like back office or something?
Yeah, or sometimes it's customer education. Let me take one step back. For example, sometimes user case means find what's the kind of right usage to track, and the price upon it can be tricky. So for example, like we have a product that does supplier helping customers to manage supplier qualification, the contract, invoicing, that kind of entire process. We've struggled. Thought about this option, but really couldn't find what's the right kind of usage figure we should use, kind of like universally applied to all our customers and the price upon it. Yeah, sometimes it's hard, and sometimes it's because of competition and the pricing routine in the industry. Customers are only willing to go with per account or per employee model.
So I always like to end with a question to all my experts, and you're my expert on China SaaS early stage investing. What is a common misconception that people have about your space that you would like to correct or clarify, set the record straight?
I think we have touched on those 2 points already. One is the retention rate in the SMB. We think it can definitely, when you think about the dollar retention, it can be definitely higher than 100%. That is a wrong perception. The other perception is TAM, like potential market size for SaaS products. Investors, what we found really funny looking back is investors really like to talk about TAM. Most successful entrepreneurs don't even think about TAM. They're really focusing on what's the sales opportunity ahead of them and how to catch them and how to use that product to expand their customer base. So what that tells us is even in today's China market, given the early nature, it's really hard to predict the adoption rate of a certain product, which making calculating the TAM a guesstimation. And if you think far enough, China is not really the limit of where those SaaS companies can grow. So in a way that if you're really building a powerful product for a strong user case, I think the business can eventually become very big. So that is usually my message to many of my entrepreneurs as well. So when they are doing fundraising, they got these questions a lot to ask them to gauge or to calculate the TAM for the investors. But that is only an investor question. We don't think that's really an entrepreneur question.
Okay, it sounds like you're saying that you're very optimistic that a lot of these companies, if they find the right use case and they are good at discovering who their customers are globally, they can basically be a quite big international company. So that's exciting. I think we are out of time. So Ray, I do want to thank you again for joining us. And maybe if you have any last comments for us, if you want to share any information about your company, where entrepreneurs can find you, all that good stuff.
Oh yeah, so if you're interested to learn more about our company, what we have invested, take a look at our website, bluelakecap.com. It should be very soon that we are going to publish a SaaS index on our website, which we tracked some of the most successful public software companies. Not all of them are like 100% SaaS, but we think that is a representative set of companies for us to track where the broad industry is heading towards by market valuation. So this is a index we will continue to build and track, and hopefully I think over the time that can be used as a proxy to tell like where the China SaaS industry is heading towards.
That's it, everyone. Thanks for listening. And if you're really serious about China tech, join our insider community. You do have to take a quiz, so make sure you listen to all of our past episodes on China tech on our main Tech Buzz China podcast. Also, a huge thank you to our editors, Carrie Huang and Bryce Ye, and of course, the entire Pandaily team for all of your help. See you next time!